So Habito, we are open for business. So we are fully remote, and our experts, we have been working remotely for many years. When the guys are on their shifts over the weekend, and in the evenings they are working remotely. So we're kind of been set up, so we are working as usual. And we've also been trying to keep customers updated as much as possible with what's going on with the coronavirus, because it is changing daily, hourly, by the minute it seems at the moment. So if you were to go to the Habito website, you would see an FAQ section, which is all about coronavirus and the impact on yourself. We've also got a mortgage holiday calculator, which we've got a slide on a little bit later, which can explain that if you were to take a payment holiday, how much it would cost you extra to do so. There's plenty of explainer videos on social media, some including myself as well. And yeah, we're doing events like this and various different social media platforms just to try and get the message out there and help customers wherever possible. So that's Habito. So if you move on to the next slide, it's okay, well, how is coronavirus impacting the lending market? So it's all well and good having a broker that's open, but are there any mortgages available? So yes is the short answer. Rates are very much still available, and they are still very competitively priced. So 1.19 is a headline rate out at the moment. However, we've seen a lot of lenders withdrawing products, particularly above 70% loan to value. There were also, there's, just build on that, there's very few available above this and none at 85% loan to value for buy-to-lets currently. Now, the killer question is when that will change. Honestly, we don't quite know, but lenders are changing and reintroducing rates slowly. So we're starting to see that happen already. If you're looking for specialist products, so HMOs or student lets or first-time buyer buy-to-lets, they are very few and far between. Dare I say it, the lenders deem these a slightly higher risk, therefore they've been reluctant to offer these type of products. And with the challenges around doing valuations, etc., which again will come on to a HMO where there might be 6-7 people living in the property, that obviously makes that slightly more difficult. So to combat that, lenders are conducting desktop valuations wherever possible. And Habito, as a lender, we are offering mortgages subject to evaluation. So if it's not possible, then we'll say, okay, here's your mortgage offer, you've got that certainty, and we'll go out and do evaluation wherever possible. Okay, so I'm just going to talk you through what would happen with your remortgage, looking at 3 to 6 months away, if it's in process, and if you've got your mortgage offer. So as I just alluded to, that if you're within 3 to 6 months away, 6 months away is the best time to start looking at remortgaging. But like I said, there are fewer options available. Now, if you are over 75% loan to value, don't panic. You can still, or your broker can still look at your existing lender, and valuations aren't required in that scenario. So that is still a possibility. We're very hopeful that physical valuations should be back up and running in June. However, it does depend on the message from the government, of course, and when the rules around the lockdown is lifted. And lenders may ask for declarations that the tenants are currently paying rent and they're not in financial distress. If you have an application in process, if your application has already been submitted to the lender, then you have effectively reserved that rate. So if the lender withdraws their products, you've secured that rate. Again, I mentioned it may be a case that it's pending until a valuation can be done, unless they can do an automated valuation or a desktop valuation. But just to be aware, there are certain scenarios and certain property types where a surveyor would have to do a physical valuation, so they won't be able to do anything until they can go out to do the property. So as I mentioned before, 6 months is the best time, because it will give yourself plenty of time to get that sorted. And then if you have a mortgage offer, some lenders are contacting customers or contacting their broker to see if there's been any changes to your circumstances. So if you've been unfortunate to be affected by furloughing, then they may ask for updated pay slips, etc. But we've not seen as many lenders as what we'd expected. And yeah, like I said, they may ask to see updated documents. So that's for a remortgage. So if you were doing a purchase, there are some similarities here. So viewings, they are restricted. Most estate agents, if not all, have shut. So very difficult to actually go out and view properties. And again, the valuations, it's very difficult to actually do those at the moment. We are very hopeful that estate agents, surveyors, solicitors are likely to be the businesses that are opening firstly. So, yeah, we'd expect that to sort of kick off as soon as the restrictions are lifted. Again, if you've got an application in process, that rate has been secured, but that's only if it's been submitted. So if it hasn't, check with your broker to see whether the rate is still available. Again, if you need a physical valuation above 60%, there may be delays, and similarly, surveyors, solicitors are impacted by this. So again, it's going to take a little bit longer. And if you have completed, you're going to have some restrictions on removal companies. They're not able to actually move people in at the moment, and there's other third-party companies you may struggle with. Getting a pot of paint at the moment is proving difficult. So you might not be able to do any paint work when you first move in or first get the property.
Cool. So the final bit that we wanted to touch on was what we think might happen when any restrictions are lifted. I think the caveat behind that is that until advice comes out from the government around the parts of the kind of house process that are reliant on each other get formally introduced, we don't fully know. We can have a kind of educated view based on which parts are more vital to kind of get the cogs turning again. So the first part of that would be resolving the glut in valuation. So what we've seen at the moment is that there's mortgage transactions are happening. People are still wanting to transact on properties and refinance or look at their next property. But what can't happen is the physical appraisals of houses. So they're getting queued up so that the expectation is that when restrictions are lifted and activity can take place again, there'll be a queue of those. So they'll start to kind of get done as quickly as possible post the lockdown scenario. That's probably focused on empty properties first, so unencumbered properties, empty ones, where any social distancing measures or things like that would be easily adhered to, but likely stuff like HMOs or student lets later on, where there's by nature more people in that property. So if you have someone looking around it, they have to take more cautious approach when doing so. And of course, there could be some regional variations. So in more densely populated areas, it could be more difficult to do things like physical valuations, whereas in less densely populated areas, that might not be the case. In terms of pricing, so in terms of actual pricing, so like for like where your product might sit from today or in 2 weeks' time, it's hard to say. So it actually genuinely could be higher, it could be lower. There's lots of things that would drive that around certainty in the economy, and how banks are seeing that the certainty play out over the next few years. But in terms of the reintroduction of the higher risk products that we have seen less so in the market of today, I would expect that the gap between your sort of 60% loan to values to your 90% loan to values start to widen a bit as essentially as lenders take on more income for the more risk that they're taking on, given the uncertainty in the economy. And then finally from us, so this is, Will plugged this earlier, so thanks, Will. So this is our mortgage holiday calculator that we've built. So I think you can get to this from the Habito website, or just Google mortgage holiday calculator, and we're one of the first few that will come up. So we've built this more as an informative tool for customers. So if you're thinking about taking a mortgage holiday, which has been kind of hot in the media over the last few weeks, this would be a good place to come. You just put in a few basic details about your current mortgage and your situation, and we would say the estimated impact on your mortgage of what that might be, and whether that would be higher monthly repayments, and what that looks like. I guess the things to be clear of when you're doing so is that interest will accrue over that period. So whilst you're not making those mortgage payments every month, you're still going to be charged an interest over those 3 months for having that money. And lenders will deal with this slightly differently from lender to lender. Some might extend the term out so that you don't see too much of an increase in your mortgage payment. Some might not, and you just pay a little bit extra each month to have that luxury of having the mortgage holiday for 3 months. There'll be no impact on your credit report, but always worth double checking that with your lender. So the lenders have come out and said that it won't impact your credit report, so they need to do from their side the reporting side back to the credit bureau so that that doesn't happen. So always worth checking in, despite using our calculator, always worth checking in with your lender. Tenants must have been affected either directly or indirectly and must be up to date on payments. And you would always ask just to consider other ways of reducing payments. So, for example, you could move to interest only, or you could extend the term of your mortgage so that you would still be paying a little bit, but maybe not your usual higher monthly repayment for your mortgage. So great. So that's it from the Habito guys. So we'll be around at the end to join Paul and Kate for the Q&A. But the next section, Kate, I'll hand over to you, is what will property market look like post-lockdown?
There's a question. Well, the real answer is we don't really know, but if we perhaps pop onto the next few slides, we can have a little look. So what I'm going to talk you through is the economic outlook, because of course that influences property prices and indeed your rents, and give a little bit of a preview and a bit of an understanding of what you can trust and look into. So there's a lot of real rubbish around in the media, and please bear in mind that what some journalists are doing is just picking up a report, which is a press release at the end of the day, putting it out there with absolutely no knowledge about how the property market works. And as the last recession was 12 years ago, they may not have even seen property prices react during a recession. So best to kind of ignore everything that you're reading at this moment in time, but hopefully you'll see why after I've gone through this. So if we go to the next slide. So basically, property typically reacts according to what happens in the economy. And at this point, I realise I have to put my glasses on because I can't see a thing. And what the information we've got here is from the Office of Budget Responsibility, so one of the kind of most respected places. The one thing to understand is that there are scenarios and there are forecasts. And one of the things that you must look for is whether something is a scenario or a forecast. Because if it's a scenario, it's saying, well, if this happens, that's what it is. If it's a forecast, it's saying this is what we think is going to happen. So they are two different things. But basically, for anybody that was kind of around, I don't think there's many people around in 1908, but you can see that what we're heading for is perhaps one of the, in theory, one of the worst economic recessions, but very short, sharp, and that we will be coming back. We won't know whether that's going to happen. It's going to be at least really till June before we have an idea of how this is going to impact on the economy. So please bear that in mind. I don't think we really know how this is going to impact until at least June time, and we may have to wait to come back in September after lockdown to see what happens next. So we head on to the next slide. The biggest thing that could impact, which you've seen here, is unemployment. So at the moment, lovely and low, about 4%, and it could go straight up to 10%. But the trick is to really understand, well, who is going to be made unemployed? Are they people who are renting, in which case it's unlikely to impact on the property price market so much, or are they homeowners, in which case it might have a little bit more of an impact? And probably at the moment we're looking more at renters than we are potentially homeowners. Some areas will hit harder than others. So, for example, I remember presenting in Shrewsbury. Their two biggest employers are the NHS and the council. Well, pretty much those guys are fine, so it won't impact. I do remember going to a little place in Skipton, near Skipton, where this whole village was renting, and they were all reliant on a Rolls-Royce factory nearby. So you can imagine there it may have quite a big impact. So it's really worth understanding who are the people that are renting your properties and how badly are they likely to get hit, and then if they move out, who is it you can kind of get in? We'll talk about that in a little bit. And the one big thing is probably avoided looking or try to avoid looking at people on benefits because of the squeeze on local housing allowance and also the problems with universal credit. They may well be your safest tenant now. So because they're getting their money, they're getting extra money. They've had £1,000 rise and the local housing allowances have gone up. So, and you've got to remember, this is not, we're not into cars here. So when the market and economy goes down, people still have to put a roof over their head, some way, shape or form, particularly in the rental market. It's just who you get in there to do that. So on to the next slide. One thing that everybody said to me, oh, inflation's going to go up because you've got all this money coming in. Just wanted to point out here, and it's a great little slide to kind of see what's going on, see what's happening to earnings. You can see that the inflation is not expected to rocket up as you've seen in the past, and I think that's more because we've got a better understanding of how to control things. I hate to sort of forecast that we know what we're doing, because everything can this could be completely wrong, but the forecast is not that it would rise. And you can see the average earnings there absolutely sort of crash in 2020, but are expected to come back in 2021 and kind of beyond. So that's kind of where we are at this moment in time. And if we move on to the next one. So this is the best way I could think of for you to remember this. And I loved it. It was on Newsnight, actually. I said, what are they talking about? Love, this is crazy. But in actual fact, what this is that this is the three types of recessions. You have the fall off a cliff and stay down at the bottom. You have the U-shaped curve, very much what we experienced 2007 to 2009 and up to about 13 it took us to recover. And what we're kind of still hoping for, maybe somewhere between the U and the V at the moment, crash down, and then we come fighting back up again when we can fire up the economy. So we will be into one of those. And actually, as I said before, nobody kind of really knows. Everybody's hoping that we're going to be in the V, but it's kind of hopefully a nice way for you to remember that. So on the next one, so property, these are all the things that influence property prices. We know, and we've heard from the guys, that lending is actually okay. And of course, that's what crashed everything back in 2007. The economic performance isn't going to be, but weirdly, we've got like a it's almost like Moses, if you like, and he's going down the river, and on the left, everybody in catering is unemployed, and on the right, everybody in retailing is doing fantastically well, thanks very much. So you've got transfer of people. Wages, exactly the same, and you've always got some areas with more supply versus demand, and some areas with more demand versus supply. So this is weird. We've never kind of had this huge upside and this huge downside, certainly when we're kind of heading into a recession. It's just everything kind of comes down. And then if we look on to the rental side, yep, that's great, thank you. So we look onto the rental side, just always remember it's capped by wage growth. So if you've got somebody in your property and they're in retail, they're fine and they can probably cope with a rent rise this year. If you've got somebody in there that's catering, they're going to be struggling to pay their rent. And that's the kind of difference that you've got. And this really kind of shows that how much rubbish there is when people talk about, particularly politicians, rents skyrocketing, rents are extortionate. I don't understand when the Office of National Statistics produce this stuff, how they're actually getting away with saying it, because it simply isn't true. But your rents will be capped by the wages of your tenants in them. And if they're earning more, they can pay more. If they're not earning more, it'll be flat as a pancake for you. So that's the basic way they work. So on to the next one. Rents, much like the prices, more influenced by economic performance. Jobs, again, you've got plus or minus wages, supply and demand. But what we've got to really understand is that in the rental market in the last recession, and you'll see in a minute, the rental market really took off when the recession came in. Recessions are good for the rental market. It's a terrible thing to kind of have to say under the current circumstances. And now that LHA rents are now matching 30% of the average market, it means that there is potential now to switch back into people, and we've got about 1 million people renting on universal credit at this moment in time on benefits, and it may well be that that's the strategy you need for the next couple of years. So you've got to really think about who is the safest tenant to let for. Paul, much better on this for me, but my summary is evictions are just going to be a mess now until next year, but I'll leave that for Paul to go on to. So where does that kind of leave us? We'll go on to the next one. This is the absolute reason why nobody can fairly predict what is going to happen. I think that if you've been stuck at home for 6, 8, 10 weeks, you're going to completely change your attitude to property. And in this country in particular, people are going to change their attitude. Renters may decide, do you know what, if this ever happens again or another recession, I don't want to be in the rental market. I'm going to buy and I'm going to do whatever it takes to get there. Whereas they might not have done that so far. If you imagine you're 55 and you're thinking of trading down in the next couple of years, you probably are just going to come out of this and say, I'm going to get on with it. Whatever the consequences, whatever's happened in the market, I'm going to get on with it. Or you may say, do you know what, we're looking up to trading up to that other property. We don't need to, we're kind of staying put. And investors are going to be critical here because they're such an important part of the market. And the big thing really, and perhaps a question for you today, is average buy-to-let investor is over 55. That's a fact, not making any assertions there. But have you had enough? Was this just too scary a moment, or has this spurred you on to do more? And it will be one or the other. There's not going to be anything in between when we come out of lockdown. So next one. And this is the real thing that I don't think anybody who's predicting what's happening in the property market has understood or factored in, is the market today versus 13 years ago is so different it's untrue. And this is one of the reasons why we don't know why house prices are going to react. Partly because lending is restricted in a different way than it was before. So people have been tested at 6 or 7% when they're buying. There's been a limit on 4.5 times lending. There was virtually no limit on lending in the past. We've got the rates are so much lower than they were in the past. So many more people now on 5 years fixed, so they're not going to kind of see any change to their rents. And apart from London, when you actually look at house prices, this is the first recession we're going into where house prices haven't been going up on this huge high. And they haven't been doing that for 12 years, despite what you hear. Every recession we had before, house prices were absolutely rocketing upwards and then came crashing down. That's not the case here. We had the subprime crisis versus lending liquidity. And as I said, you've got these two-tier effects. Some people are doing really well in the economy and some people are doing really badly. And we're not sure, I don't think, how that's going to affect it. And then, of course, the structure of our market is completely different. When you look at these figures, we're talking about 25% of people who are putting a roof over their head relying on a mortgage. And when prices crash, they typically crash because of high levels of repossessions and people having to sell. Well, an awful lot of people won't have to sell because they're on that 5-year fix, remember, at an extraordinarily low rate. And it's probably cheaper for the government to keep them in those homes, not allow lenders to repossess, than for that to happen. And we had about 45,000 repossessions, I think, at the height of one year in 2007. And then in the 90s, it was actually up to about 90,000. And I think the government is really going to try and stop that from happening. And that will limit the amount house prices will fall. So a massively different structure. And again, we've never tested how a recession hits this model in the past. So looking on to the next one. So the big test is, and don't worry about going back, as to whether there is now a floor in the market that are prices that was never there before. And of course, different areas have different risks. So what you can see here is that in some areas, loan to values, for example, are quite high, whereas in other areas, they're really low. And that's because in different places, like in the Northeast, for example, house prices are still 9% lower than they were 12 years ago. So it doesn't, this kind of cost, the sort of sensible lending that we've had, etc., it will really hit different markets in a very different way. I apologise if you hear some little squealing in the background. Normally my dog's very well behaved, and at this moment in time, he's just not resting, so I apologise for that. Next one. Hopefully it's not interfering too much. So these are the forecasts that are coming out. I think the CEBR is being very, very, this is very technical forecast to me, and it's looking at what happened in the past and it's applying it to the future. Savills, I think, is kind of more sensible, but what could well happen is some places will go down by 5%, some properties will go down by 10, and some properties will go down by 13. Some might not go down at all, and some might go down by even more. And while I think we'll see a real individual property response, depending on that absolute individual supply and demand and what's impacting on the jobs in those areas. And then I think the next one is the Knight Frank forecast. Yeah, so you can see there, again, they're being sort of slightly more optimistic in terms of how quickly it will take the market to recover. So it's kind of all the doom and gloom that's out there. I trust Savills and Knight Frank have not been bad at their forecast. CEBR, it's a bit too economic for me. So I think these are the guys to kind of watch for the future. And moving on to the next few slides, what will happen to rents? Again, you remember we talked all about that affordability. Oh, they're skyrocketing. Oh, they're extortionate. The good news is for landlords is that in the main, the rents you charge are affordable. So as long as those tenants can retain their jobs and all those people that are furloughed, for example, you'll be fine. Otherwise, you're probably going to have to look at maybe taking a little less rent and moving more towards the universal LHA rates that are out there. So if you're not sure and you're worried, definitely look at what LHA rates you can get in your area. And if you're worried about, you know, if you've got empty properties now, you're worried about filling them, contact your local authority now so that you can get yourself ahead of the list to help. So I don't see the impact on rents being quite so harsh as they perhaps will be on prices. And on to the next one. So in summary, really, the first job that we've got to do and we're working on is how do we get the market open? How do we prove to the government that it's safe to open this and we can do the majority of our work at 2 meters distance? I think we can. The tough side is the removal bit, but we're working very hard on that to make that work. And the big thing we can't predict is people's change in behaviour. And we won't know until the market opens how that's going to influence. And it's really important, as is lender reaction, which is why it's so helpful to have the guys' input today. So that's where we are from that perspective. And we also won't know the impact on prices and rents probably until summertime, and that's because it's not really going to be until June, July that we understand how many people are going to be employed, how many companies aren't going to come back from this. So base your decisions on the various forecasts that are out there. Base your decisions on whether, you know, can you switch to universal credit if you need to tenants on universal credit, and find a way to make sure that you kind of look at all the different threats, if you like, that are out there, and what is it you can do to mitigate those. Because the beauty of property is there's always a way of making it work. And that's where I kind of hand over to you now. I hope that was kind of useful, just to give you some of the things that you might come up against, and therefore can work out a strategy now of how to mitigate. So a fairly quick run through, and hopefully that was useful.
Awesome. Thanks a lot, Kate. So yeah, guys, there's a Q&A box at the top. So we'll go to the next section, then we can answer questions at the back. So I think Kate and Paul will both be around for a short while at the end to answer questions along with our mortgage expert. So thanks a lot. That was really interesting stuff. So great. Next up, Paul. So I think we're going to talk about your rights as a landlord. So I'll hand over to you.
Thank you very much, Ben. Thanks, Kate. Could I have the next slide, please? So, landlords, how can you protect yourselves? We are going through the unknown, as Kate alluded to. At Landlord Action and my role as brand ambassador, I've been inundated with calls from very concerned landlords, residential and commercial, actually, with regard to tenants that have made contacts since the lockdown and how they've been affected by this COVID-19. So if a rent payment is missed, I mean, I've got to stress, during these times, you've really got to engage with your tenants. I've never seen anything like this. I've been, as mentioned before, I've been helping landlords for 26, 27 years, and this is unprecedented. You've really got to work with your tenants, get a good line of communication. Hopefully, majority of your tenants will basically be truthful and actually say, I've been affected by COVID-19. Make sure you have records of communications with the tenant. Hopefully they will send you information with regard to if they are affected by the virus and if they've been furloughed or on universal credit. Ben, you mentioned before when you talked about holidays, obviously with regard to mortgages, get written confirmation that there's actually nothing, there's no issues with regard to the property. We do see at Landlord Action where we have been contacted. I mean, obviously I want to talk about the changes with regard to eviction and notices, but we actually have seen tenants that actually are using COVID-19 as an excuse, where actually they may have been struggling beforehand. Actually see if there is a proof of a mandate to make sure that they are going to be paying the rent. Obviously you're budgeting, making sure that you can pay the mortgage, of course. And if they do need government assistance, what proof have they made with regard to the application on universal credit? I'm not going to talk about universal credit in too much detail because we could have another presentation about universal credit with regard to my thoughts on that. They do pay 5 weeks in arrears. You've got to try and get the direct payment, but obviously getting written proof as to where your tenant is at the moment with regard to their work situation. Kate mentioned about a lot of the industries that are being affected. With regard to the residential market, we're seeing a lot of landlords, majority of landlords that we see really affected have been student landlords, and HMOs have had their portfolios really affected with regard to obviously students moving back to the family home, don't know whether they're going to sign for the new term, and also a lot of tenants in HMOs that have possibly lost their jobs as well. Can I have the next slide, please? So what is coming in, and we are advising the government on this at the moment, is a pre-action protocol. So what's happened is that notices have been changed, the time period, which I'll come on to very shortly, but the government now are going to bring in, and we know this is going to happen, a pre-action protocol, like what happens with regard to social tenants when there is rent arrears. So as a landlord, if there is an issue with regard to rent arrears, you need to find out and have communication with your tenant. I think these measures are going to take place, and you have to prove they take place with regard to documentation before you can serve a notice. And I think this evidence could be used at court at a later stage. So this is another mechanism with regard to tenant sustainment. Does the tenant understand the communication that you have with them? Do they speak English? Can they read? I know that sounds quite strange, but you actually have to know that. Is your tenant vulnerable? Do they have mental health issues? Do they need support in the care in the community? And understanding the rent arrears, the entitlement benefits, the repayment plans, you actually have to map those out. And there is a procedure which obviously is being spoken with one of our lawyers at the moment at Landlord Action. You have to provide the tenant with rent arrears schedules as to when they fell in arrears. And this is pre-action correspondence. The government want payment plans. They want landlords to give tenants a chance. And that's why we have brought out our new business actually yesterday, which is a tenancy mediation service with our sister company, the Property Redress Scheme. So what's happening now is you can't evict a tenant. It's going to take 6 to 9 months, possibly even longer. Landlords have got to do something. They've got to be proactive. And actually, in this time of crisis, and really it is firefighting for a lot of landlords, because obviously the majority of landlords out there have 1 and 2 and 3 properties, is actually, it's better to get something rather than not. You know, you are still getting landlords that are being unreasonable when there's proof that a tenant has fallen in hard times. And let me be very clear, a good tenant doesn't turn into a bad tenant overnight. Let's be very clear about this. You want the tenant to stay in your property as long as possible. You don't want void periods, and you want to hopefully strengthen your relationship with the tenant at the back end of this, hopefully, obviously, when we get out of lockdown. But they're the details of our new tenancy mediation service, which we have just launched, where trained mediators will speak to landlords, speak to tenants, and try and mediate and do a deal with a contract which can be used as a legal document. Next slide, please. So also you have naturally breach of tenancies. The majority of breaches are rent arrears, okay? We have at the moment approximately 600 cases at court, a split of Section 8, maybe 60%, 40% Section 21, that are stuck in the court system because of the suspension. Obviously there's rent arrears, there's antisocial behaviour. We've seen a huge rise in subletting and breaches with regard to tenants putting properties on Airbnb. There's damage. Social distancing or lack of social distancing in a property is not a breach of tenancy. You have to take a commercial view with regard to a breach of tenancy, bearing in mind it's going to take a long time to actually get your property back. So there are various breaches. What's going to happen is Section 21 is going to be banned further down the line. I think that's going to be accelerated now, and there will be further new grounds added to Section 8 with regard to breach of tenancy. The next slide, please. And serving notice. So the law's changed. Now, if you serve a Section 21 or a Form 6A or a Section 8 notice, which was for the breach of tenancy I mentioned, that was a 14-day notice. Now they are 3 months. And that law has come into effect from notice served after the 26th of March to the end of September. It could be extended. So bearing in mind, you serve a notice. Once you serve the notice, it expires, then you have to issue court proceedings. At the moment, current court proceedings are suspended until the 25th of June. My guys, my solicitors, we have 10 solicitors and paralegals still working, obviously not as busy because the courts have effectively shut down, and they are basically adjourning cases. On the week of when the ban came in, we had eviction cases. Bearing in mind the 500-600 cases we've got at Landlord Action were pre-COVID-19. So these were rent arrears cases, tenants that weren't affected by COVID-19. Those landlords have been really, really affected. I mean, we've just, if you go on our one of our websites that we own, which is landlordszone.co.uk, we put a story up there of one of our landlords who is losing a lot of money. Bearing in mind, she's going to have to add another 6 to 9 months rent arrears until she gets her property back, and she was owed a lot of money. We had one landlord where I was going to be filming the story on our new series of Nightmare Tenants, and she was owed £22,000 rent arrears. Don't ask me how that rent arrears built up. She obviously didn't do the management very well, but that eviction was pulled back, and she doesn't know when she's going to have another eviction date. So you have to bear in now that we are in unprecedented times. It's going to take a lot longer to get your property back. How can you be proactive? How can you have sustainment with your tenant to make sure they stay in? And of course, as Kate mentioned, the courts are going to be absolutely swamped. I actually had the civil servants from the government in my office giving advice about housing courts, because there was housing courts consultation, the banning of Section 21. They are obviously totally linked, and they were thinking about bringing housing courts here. And I said, you need to make sure you have major investment. That was pre-COVID-19. So I don't know how the court system is going to be able to cope. The government now are putting a massive initiative behind mediation, and that law with regard to pre-action protocol will be coming in most definitely as well. The next slide, please. And obviously what will happen when the emergency measures are listed. So, of course, the government are going to review. They could further extend, the suspension and notice periods. Okay, my view is a bit like Kate's. I think rents will come down. I think house prices will drop, obviously as to what level. And I totally agree with Kate. I think until you have some sort of clarity, I think, and really get a true idea, I think in the summer, when there's a little bit of normality, I think you can really judge them. But, I've worked in recessions all my life, in my working life, different recessions from the late 80s to obviously 2007. There will be job losses, and of course there'll be an increase in evictions, and of course homelessness. How are the councils going to be able to cope? They are at breaking point at the moment with regard to housing social tenants. I think they will really, really struggle. I expect actually on the back of this, I actually think that there will be major investment in social housing, bearing in mind there's going to be a lot of debt to pay back. People still need to sleep somewhere. My view is actually, I think the commercial property market will be affected a lot more than the residential market, because I think there'll be a lot of retail and a lot of commercial properties where we are seeing, and we're doing some negotiating at the moment with our lawyers who specialise in it, with actually commercial tenants looking to walk away from their leases. So I see that that's going to have a big effect. We still have a shortage with regard to housing, and of course, buy-to-let is still buoyant. Yes, it changes, but of course, we do have that shortage. So that's what I think what will happen on the back of it. There's obviously many more things that we can talk about, but I know we're a bit strapped for time. I think that's the last slide, if I remember rightly. We might be on to, we're on Q&As.
Well, thanks a lot. That was really insightful stuff. So I hope everyone listening, that was super useful to you guys. So in the background, we've had some questions come in. So I think we've unmuted some of the guys. We've got Teddy here, who's one of our mortgage experts, who can answer some of those. So we've got around 10 minutes for questions, which is great. So let's try and get through as many of them as we can, and I'll put them to someone. But obviously, guys, feel free to come in whenever. So the first one is just around a specific situation for a specific mortgage. So Teddy, I'd be keen to get your views as an advisor, what you would do in this situation. So they're mortgage free under their son's name. He's still studying at uni. Can he raise money on the property? Looking to raise around 30%. Let me just unmute you, Teddy. Oh, no, yeah, Teddy.
Hi. So yeah, I mean, being at, studying at uni will cancel out quite a lot of lenders. You've got to bear that in mind, having no income at all. So there will be a few lenders, and at 30% it is absolutely possible. So Habito will be one of the lenders that could potentially look at it, obviously subject to the whole case. But there are, a handful of lenders at 30%, especially. You will have basically the whole market that is available to yourself. But it's just about making sure we go over the hurdles. But yeah, I mean, without looking at the whole case, I can't give a definite, but it is something that we can possibly look at indeed.
Great, thanks, Teddy. The second question, I think, for Paul and Kate in particular. So they have a tenant who wants to move out on the 5th of May. They know it's not against the law. How long do they need to give the house to detox in case that there's the tenant had the virus and it's safe for all the inventory clerk to go in?
Well, I think, go on, you go first, Kate.
Yes, a rule that most people are operating at the moment where possible is 72 hours. Please don't ask me for a scientific rationale behind that. I have no idea why. But I don't know about you, Paul. That's the recommendations that I'm picking up.
Yeah, no, I've heard that as well. And actually, bearing in mind, with regard to the laws that came in, they're still saying inventory clerks technically shouldn't go in and still do, obviously, the checkouts, because it's not deemed essential. So, I mean, what's happening is we're still seeing landlords and we're still seeing various different operators trying to obviously still carry on trading, albeit with the social distancing rules. But I mean, I heard that 72 hours as well. I mean, a lot of what's happening and a lot of the practicality stuff, a lot of it, the government have just thrown. I mean, there's no provisions with regard to landlords, with regard to how they manage HMOs. There's hardly anything with regard to what's come in. So a lot of it's been put down to common sense. But I've heard 72 hours as well.
Yeah, and the other thing on the deposits, both the deposit schemes have some really good advice on how to deal with that. So either head over to the specific information on the TDS or the deposit scheme, so you can handle the deposit side of things. Because you might think that's quite complicated, but I think they've come up with some quite good ways of dealing with it.
Brilliant. Great. The next one again is kind of similar advice seeking, I think. So just bear with me, it's a bit of a longer one. So Penny has come in and said they had a tenancy agreement signed and sealed around the 10th of March. The renters couldn't get their visas as the UK embassy was closed, but we agreed rental would start on the 30th of March. Our letting agent emailed on the 28th of March, so just before, saying apparently the government directive effectively prevented new tenants from moving in. They also got an email from Direct Line to say that the rent cover, guarantee cover, didn't apply because of the government announcement, RE, removing the legal mechanism to take a rent guarantee forward. I guess just a bit of an outline of thereafter, where do they stand?
Well, I mean, on the rent guarantee, most of the providers have pulled out the market because of COVID-19, and also obviously with regard to their terms of business and their T's and C's, but also because of the eviction laws that have come in. I mean, loads of landlords aren't getting paid with regard to rent guarantee. They are servicing and paying for the legal fees. What's happening is obviously with right to rent. Seeing the visa is obviously critical. Obviously now it's all going to be done by Skype. That's an issue. I mean, with regard to move-ins can still happen if you are contractually, if that can still go ahead, and we still are seeing loads of move-ins happening, bearing in mind if the property is empty and obviously there's no one pre-living there that was self-isolating. So, there's been so many deals that have just been put on hold, and actually a lot of tenants changing their minds as well.
Okay, great. I hope that answers your guys' questions. The next, again, is similar around the advice side. So can I ask for more rent up front, i.e. 2 months advance of 1 month for the last month of the tenancy, which is 3 months of a 6-month tenancy agreement? Can they do that?
Well, I mean, asking for 2 months up front and you also asking for a deposit Yeah, that's a no-no, because if you went to court, the judge sees, hold on a second, you're trying on. That doesn't normally, we see obviously tenants that will pay 6 months up front or 3 months up front, and then the next quarter, your next third would obviously be paid at a certain time. You can do that, but there has to be clarity with regard to the deposit, So you can come, I think if anything, you list down quite clearly the payment terms in the tenancy agreement, so there is clarity. Obviously there can't be a double charge. A lot of landlords were using that to try and get out of not putting the deposit in the deposit scheme.
Yeah, great. What one for you maybe, Kate? So mortgages for social tenants, to my knowledge, tend to be more restrictive and higher rates prior to the current climate. How do you believe this will be affected going forward? Will they become more competitive due to potentially more landlords swapping to social tenants?
I think the government is going to do everything it possibly can to try and keep roofs over people's heads. As Paul said, homelessness has already risen by 165% since 2010. And a lot of that, sadly, is due to the sort of what I feel is unnecessary attack on buy-to-let landlords that's happened. And I hope that this will change everybody's attitude. We have a weird situation on social tenants where landlords and agents are pitched as these evil people taking advantage of the vulnerable, and for those good landlords and good agents that take care of them, there's nothing like that going on. Meanwhile, present company accepted, of course, but lenders were just left alone to say, we won't lend to you if you've got a social tenant. Insurance companies are still left alone, and I've even seen some tenant groups give excuses as to why it's okay for them not to insure against social tenants. So I think what there has to be now moving forward, and I hope it will accelerate it, much like the issues on section 21, is that there has to be a new contract between the government, landlords and social tenants. They just said, if you're renting to social tenants, here's one contract. That's the contract that you have to use. Here's all the safety certificates, and unless these are checked, you can't have a social tenant, because I think potentially they're going to be quite valuable moving forward into the future. So I would hope that lenders, insurance companies, but especially the government, really starts making it a win-win, if you like, for landlords, tenants, and social tenants to work together, because actually the tenants have things stacked against them. And it's not the landlord's fault or the agent's fault. They're the ones always in the firing line for the blame. So they have to rethink this, because much as I have fought very, very hard for investment in the social sector and council houses, because that's actually the reason we have a problem, is that's what's missing. That's what successive governments haven't built. There's no way they're going to have the money to fund that programme now. So they're going to be more reliant on buy-to-let landlords, and they have to come up with a better, fairer contract. And lenders and insurance companies need to work with government and landlords and agents.
On that point, yeah. Kate, I spoke to a landlord today. He's been a very old client of Landlord Action, and he is now giving a lot of his portfolio. He's got over 70 properties. He's actually going to be doing direct deals with the council, 3-year deals. And I think you'll see a lot more of that now, where landlords will want the security. They want to make sure that I rent to the council, I know I'll get my rent, I won't have any voids, I'll cut out the letting agent fees, and I don't want the headache. And I think you'll get a lot more of that now, a lot more direct deals. You see a lot of landlords looking at the social market. Now the LHA rates have gone up, which is good, but direct payment is the key. Yeah,
it's an extremely good point, Paul. You're absolutely right. Yeah, absolutely right.
Thanks, guys. The next question, I think one for Paul. So what are my rights as a landlord with an agent who is paying a guaranteed rent, who is now saying they can't pay full rent and will be unlikely to pay back the shortfall once we ease out of lockdown?
Yeah, I've had loads of these, Ben. The guaranteed rent and the rent-to-rent market is going to be obliterated because of COVID-19. Let's be very clear about that, okay? You get a lot of agents that do the guaranteed rent. They sign an agreement with the landlord, which is a commercial agreement, and then they have the consent to sublet. What's happened is that market's changed, and there's been obviously loads of defaults. Basically, the agent is on the hook for the money, okay, period. So, you are seeing a lot of small operators You know, a lot of these people that do rent to rent, that go on these courses or whatever, not even agents, that are giving keys back to landlords and trying to walk away, and they were trying to break it. I see that market. I mean, I've been quite critical because it needed a lot more regulation, and I'm even exposing. If you watch the new series coming out in June, I'm exposing 2 dodgy estate agents doing rent to rent, guaranteed rent, that have been stealing money, who's not passing on. It's a big issue, and that was pre-COVID-19. So, you know, if that person has got an issue, by all means, email me at paul@landlordaction.co.uk. I can give some advice and help you.
Cool. Just conscious of time, so we'll just do a few more questions. So, frustratingly, we can't get to all the questions we can. So, if you want some more advice around your mortgages, obviously, Habito are there until 9 p.m. tonight, so you can go online and chat to one of our experts there. But yeah, let's just cover a few more while we can tonight. So, one for you, Kate. Considering all of the uncertainty in the market, what would your advice be for someone considering entering the buy-to-let experience for the first time?
Oh, take your time. I definitely take your time, and don't do anything until kind of August. Well, I'm guessing kind of August time. If you've got, what I would do, the best thing you can ever do, people talk about going on courses or anything. Do you know what? You know, you've got a good idea of how much money you have. So talk to yourselves, for example, understand what funding you can get hold of. And then the second thing to do is then look at, where does that funding deliver the best thing for you, best return for you? Are you looking for capital growth return? Are you looking for rental return and yield and income? Because you'll find that even in somewhere like Nottingham, you'll find that some areas are good for yield, some areas are good for capital growth. And I don't think that will change moving forward. So this time, absolutely get your funding sorted, get your finances sorted, make sure you've got your best credit rating you can, and then really think about what is it, it's almost like, what is it your end game, and then work backwards, and look at the areas, and absolutely I would spend day after day after day looking at sold property price data, going back the 20 odd years that we have it, and look to see which properties have done really well and which haven't from a capital growth perspective. Go and have a look at which properties are renting in a day or two, which are taking months and have sat on the market since January, and really get to understand your area, because no course can teach you that nitty gritty postcode stuff that you need to know. You've got to do that legwork yourself. Don't leave it and trust somebody else with it. So spend your time doing that. And when you see a good deal, go for it, because you'll know it's a good deal because you'll understand the pricing better. So I think that's really the best advice. Just take your time at the moment, because we don't know. June, things might be fantastic. You might have the best deals then, but they might be next year. We don't know that. And you actually don't know when the best time to buy was, sometimes until 2 or 3 years afterwards. So it's more about getting your knowledge up first so that you know a good deal when you see it.
Really good. Thanks. Super helpful. Finally, Will, just the last one for you. So for Pascal, have you observed that desktop valuations generally come in lower than physical valuations?
Oh, good question.
So far, sorry, was that, yeah, so far, not really, to be fair.
Take it.
I've had a few recently come through this week, actually, and they've all been very good. And actually, one was over what we put the application in for, which meant we got the slightly better loan to value. So no, actually, I haven't seen anything negative, but we haven't had the volume yet to really give a fair answer. But so far, so good.
Yeah, just to add to that, I've had one which was slightly lower than expected recently, but the lender is willing to do a physical valuation as and when they can. So if they are coming down lower, then they're not saying that's final. They will go out and physically view the property.
Makes sense.
Yeah, and I think even more uncertain with what's going on today around where property prices will end up when the market returns back to normal. So there'll be even more focus on all types of valuation, I'm sure of it, desktop and physical. Great. So unfortunately we've timed out. So first of all, thanks everyone for joining. I hope you found it really useful to do. We're looking forward to carrying on these on in the future. So please look out for them and rejoin one of the next sessions if you'd like to do so. Special thanks obviously to Kate and Paul thanks very much for your slides and input today. I'm sure it's hugely valued by us and by the audience. And obviously, thanks to the Habito guys. Really appreciate you joining us tonight. Thanks, guys. Really appreciate it.
Cheers now. Bye. Thank you.
Bye. Thank you.
Bye.